Alright, now I'm actually going to be going over this trade from yesterday because I did record yesterday, but I did not post my video because my something with my corrupted files, like my files just got corrupted again. I don't know what's happening, but hopefully this fixes it. Hopefully this don't happen again. Now let's get straight into this. Now, what I was talking about yesterday is, well, let's get straight into this. Yeah, I see this yellow dotted line. That's when market opens for me. Um, 7 a.m. New York opens. Now, we did get this rejection off of this yellow line I have right here. Like, y'all are probably wondering, okay, what do I care about this yellow line? Let me just go back and tell you why I got this yellow line. On the day prior to yesterday, I took a trade and there was an impulse move up, an impulse move upwards. And then price, it stopped at this price level at like 24.49, and then this went down and just consolidated. Now, we don't go out here and try and guess every single, you know, price level. No, we can't do that. It's just impossible to do that. But we just do the best ones, right? Now, of course, it's going to be an area of interest because this was a move up and it went down, and that usually means price is going to respect the zone that it previously was a high. And then price does whatever it does, it breaks it, but it doesn't even have that much buying power. See these super tiny candles, they're just super tiny. And then I marked out this other high that it made, but it didn't even break it because it was just consolidating. The market was just on a sideways movement after it made that high. As you see, it's just kind of running sideways, no up or down. And then coming to yesterday, New York open, price was below it and it went above. No, it didn't go above. I mean, it touched this yellow line, and we're probably thinking, well, is it going to break this high and retest and go for higher highs? No, it doesn't. It instead gives us a three candle wick up with a huge doji on the downside, which usually means it's gonna be a reversal. And that's exactly what it was. And this is what I mean by a three candle wick up. Three constant looking candles up. You see how each candle is about almost the same size going upwards. You see how each candlestick is almost about the same size going up, and it does not break this yellow line or this red line. Same line. Let me just delete this because the yellow line and red line is the same thing. It does not break this yellow line. It does not close above it. And then we get a huge doji candle to the downside. That gave us a good indication that we were going to go for selling. And that's exactly what I did. That's why I placed my trade right here. After this doji closed, right here. Now, oh my gosh, why is it? Okay, that's where we have our um entry. Now we have our take profit in the cyan line. In the cyan line, it was a previous high. The same concept, you guys. It was a impulse move upwards. You see how there's an impulse move upwards, and then it stops its power. It stops its buying power. Then it starts going down. And we don't care about whatever it does, consolidating. We don't care about these sideways movements. We don't really care about that. What we care about is um the last high it made in the impulse move upwards, and that's what we cared about, and that's what we analyzed. That's why I put my cyan line. And not only did it have this impulse move upwards, but whenever it price I had took this trade, I had noticed that it kind of broke this and it kind of retested it with one candle and went upwards, and that was a line of interest. And that's where my take profit was, and just my stop loss is very simple. in this previous high that I had marked out. And yep, that's literally my trade for today. That's all I did. And I did take this other trade just cause why not, for the fun of it. Seen price went over here. Seen price. Alright, you know what? I seen price didn't want to break this. I'm gonna go for some buys. Literally the same entry, just upside down. And that's literally all I did for my trades. These line of interest, you could really call them liquidity, but they're not liquidity sweeps. Remember that. It's not a liquidity sweep because a liquidity sweep is when price liquidates. Okay, imagine this is liquidity. It doesn't break it, then it breaks it. Then this right here, this break of movement on this line of interest or this liquidity line, that's called a liquidity sweep. My bad if I'm pronouncing it not that good. That's a liquidity sweep. Now, I don't do that because you could really be I'd be losing a lot of entries. That's something I have noticed. So what I instead do is I just use lines of interest. If it doesn't break it and there's a line of interest over here, well, of course it's gonna, you know, basically all a line of interest is a line that price likes to respect, a line that price likes to be around. Now you see how, imagine this line is a price. It's just kind of bouncing off this red line. It's not disrespecting it. It's just kind of interested in this line. It's interested, interested, interested. That's literally all it does. It's respecting it. It's interested in it. That's what I mean by lines of interest. That's literally all I did. That's my entry for today. That was my uh trade for yesterday. Now I'm gonna post another video in a bit about this trade I took right here. Try and guess what it is. Very simple. Now, trading is not hard. Trading is very simple, but a lot of you guys like to overcomplicate things. Now, y'all are probably watching this video and thinking, how am I gonna make hundreds to thousands of dollars with three lines on my screen? That doesn't make sense. Well, it does make sense. I'm using pure raw price levels. Just because I don't have millions of indicators and millions of drawings on my screen does not mean I'm not profitable. You're just making things complicated. Don't make things complicated for you. That's the end of this video. AMG Trades is out.